Hi friends, it is time to buy. This is serious. One, for me to even do a video this long, it is a miracle. Two, I'm doing a presentation, so shit is coming. So if you have followed my moves on Twitter, congrats, you are in massive profits. You need to stay nimble. Things change in an instant, and it is important for you to be nimble. So, look, I could get things wrong, but I've been right much more times and I'm wrong, and that's all that matters. And in investing, you need to form a thesis and follow through it. If you have no thesis, what do we invest for what? Anyway, let's start with the slides. Long story short, buy. Obviously, there's a caveat and there's a strategy behind this. I will cover this in the last few slides on how to do this buy. I'll talk about what happened, the central banks, I'll give an explanation, and I also will assign probabilities of the outcome. So what happened? We need to go to my Twitter on the things that led up to now. On the 11th of March, I shouted, get out of stable coins now. In case you do not know what is stable coins, it is the crypto version of the US dollar pegged 1-for-1. So when I shouted this, USDC 1 hour later crashed. There's only one thing you can do to get out stable coins is you cannot go to the bank and withdraw your money out. It's not that fast. So the only action you have to do, those who are crypto people, is to buy crypto Bitcoin or Ethereum. Obviously, you're welcome, those accounts that I saved. And at this point of time, you have a lot of crypto in your account right now. Thereafter, I start thinking about second and third order effects. You need to position yourself. I give a 90% probability that the crypto will shoot up. And guess what happened? Yeah, we shot to the moon. Again, those in profits, you're welcome. There's only one person, me, that called this every step of the way, the Silicon Valley Bank crisis and the USDC crisis correctly versus 90% of doomsday shit posts out there. It's important to get your mindset right when the whole world is in crisis. I also talk about Charles Schwab. Everybody was worried about Charles Schwab, this one of the biggest retail banks for investing in stocks. People say they're going down. I gave the middle finger. I gave my reasons why, and I bought Charles Schwab. So those that have followed, I remember when the markets opened, Charles Schwab was down a lot. There was a halt. And after the halt came up, I bought the stock. And guess what? Those who have followed, and a lot of people did follow, you can see the comments below. We are in profits. Feel free to take profits anytime. On the 13th of March, I initiated a Palantir $300,000 buy order. Look, now with AI and Palantir lately of the last quarter, it's profitable. So weighing all these factors, I think Palantir is pretty good investment right now. And it is not a crowded trade. I do not like crowded trades like Tesla. Like everybody knows it. There will be less inefficiencies in the markets. So obviously, after that, Ethereum shot even higher. I took 10% profits. Look, it shot so high, it doesn't hurt to take 10% off the table. Thereafter, I'm just shit posting. Shit posting. And I talk about the $2 trillion to be injected into the US banking system, a comment by JP Morgan, and this is where I present to you these slides and I'll explain why this will be happening. So let's talk about the roles of central banks. Number one, what is their mandate? Inflation and unemployment. And number two, they are the lenders of last resort. They are the king of the banks. So if they go down, everything goes down. So right now, what's the problem? Inflation is at 6%, and there's a bank run happening right now. If you have not been following the news, let me update you. The regional banks have all the money sucked out to the four major banks. Four major banks is JP Morgan, Citibank, Bank of America, and Wells Fargo. Let me explain to you why there's a bank run happening right now. Imagine you are a US bank account holder, your life savings there, and you see this news. If you were there, what would you do? You would take your money and transfer to the safest bank possible. Look, you are not going to go to the bank and withdraw in cash. what era we live in right now, it's not going to happen. So most people will move their money to the big four banks. And this is a very big problem. Why? You see, banks are basically highly levered bond funds. This is a quote from Lynn Alden. There's no banks in the world that hold your money 1:1, $1 for $1. You need me one. So when a bank run happens, the banks need to sell assets like bonds to give you your money. And when everyone withdraw at the same time because they are afraid, the bank is dead. So again, now let's go back to the same problem and we assign certain probabilities. Inflation is 6%, and there is a bank run happening right now. Looking at this, inflation, you actually could kick down the road a little bit longer, torture the citizens a little bit longer. It's not an urgent thing to do right now, but what's urgent is a bank run. And, action speaks louder than words. If you look at the Fed balance sheet, guess what happened? You look at this $400 billion pumped the system. All the QT that was happening wiped out. And this is called liquidity injected into the system. Some people, they say it's not QE. I do not care. QE or not QE, this is another form of QE, injecting money in the system. And money has to flow somewhere. So right now, let's assign certain probabilities. There is a 70% chance that the Fed will pause. Bonds will rocket. And because the bonds go up, the banks will be safe. They have less losses. You can see your losses is very high right now. And because of that, if you do that, inflation would spike out of control. And that means risk assets will go up. Risk assets like stocks and bonds. And that, obviously, I gave it a 30% that the Fed will have the balls to do what they say, which is to control inflation right now. There's no way they're going to hike 50 basis points. Maybe 25. No way a 50 is going to happen. Now let's talk about second and third order effects after knowing all this knowledge. If you're going to print more money, you're going to dilute the US dollar. That's why the US dollar is going down. And with increase of liquidity, stocks will go up. Gold and crypto will go up. I think for stocks, right, because stocks has there's high interest rate environment right now, it's like a weight on stocks. So stocks will still go up, but I do not think it will be as much as the gold and crypto war. And there's this liquidity chart on the gold and crypto. Blue line is the world liquidity, global liquidity. This chart was updated in January or February. It's not updated to date. So I would think this orange line is even, this blue line will go up even higher. And I would see that it's a good chance that crypto and gold will follow through together with liquidity. So right now, obviously you need to take action. What kind of action will you do with this information? You can go to my Twitter and I'll explain to you the barbell strategy. Barbell strategy, 40% high beta, 60% cash. 40% high beta means stocks with higher reward, but the risk is also higher. So it moves more, like higher volatility. So again, my position is Palantir long, and which is a high beta stock, and Ethereum long, so which is crypto. I have like 1 or 2 gold bars, but that's in the safe deposit box. So this is the action that I recommend to a lot of people. So in a case where everything crashed right now, yeah, you still got 60% cash to deploy into the things that you have high conviction in, the things that you really believe in, and that is really up to you. For me, these 2 stocks. Again, why not Tesla? I think Tesla is a overcrowded trade, and I really do not like overcrowded trades. There goes the efficiency of, I like to trade the inefficiencies of the market. So I hope this video helps you in your investment journey. I will link my Twitter account below if you haven't followed. Invest safe.